Awesome. Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys today morning. To the Muslims who are joining us from wherever you're joining us from, I wish you all a happy Eid Mubarak, and I hope you will invite us for some pilau within the day. Okay, so today we have the US CPI, and of course, this is just a snapshot of essentially what is happening in the markets. We are having a lot of things relatively choppy today. Euro USD, GBP USD, AUD USD. Most of these different assets are looking at the CPI. Now, we've been having quite a lot that has been affecting the market since Monday till today. We have a lot. Turkey recently again announced that they are going to reduce the exportation of certain things to Israel. Israel responded saying they're going to retaliate. Currently, as we speak, there are also a few things that are not that sorry, there are also a few things that have also been affecting the market. Like yesterday, we had an earthquake that actually affected Israel. Now, in addition to that, we also saw that the Cairo talks that are currently ongoing between Israel and Iran seems to have hit some kind of stalemate, and we are not seeing a lot of progress from there. So a lot of things are actually pressing gold and providing gold a lot of upside. So today we have the US CPI, and the US CPI is going to be something that's going to affect the market, especially as we go into the rest of the week. However, the main thing regarding US CPI, before I go through the statistics, first is that a lot of the commentary that we have been getting from the Federal Reserve is essentially indicating to us that now, before the year began, a lot of the Fed speakers were telling us that we are not going to hike the rates until we see signs that inflation is coming steadily to the 2% target. But now, especially from the recent FOMC conference that we had, Powell seemed to have alluded to the fact that any kind of resurgence of inflation is not going to stop them from cutting rates. Okay, that's what we are getting from them, and I think this essentially is not really going to be that much of a surprise, simply because during election years, inflation tends to surge quite highly. And of course, this is not a surprise. This is because of elections. Whenever you have an election, you'll always find that there's some kind of resurgence of inflation, especially services inflation. That's the one that has been relatively sticky. So on one hand, we are going to get a resurgence of inflation today, if we look at the readings, which are then might also provide some kind of hints to the Federal Reserve that they might want to go slow on the rate cuts. But that's not going to happen, guys. Whether inflation reduces, whether inflation pauses a little bit, the rate cuts are going to have to come without a doubt. Okay, yeah. So looking at some of the forecasts by some of the US banks, I usually get them from Financial Juice. You can get some time and check out the reports that are released by Financial Juice. So we have some forecasts here for some of the CPI readings. The first one is UniCredit. UniCredit is expecting that there's going to be a deceleration on the CPI headline number from 0.4% to 0.3%. And we're also expecting that there's going to be a likely slowdown also for core. And they are saying that energy and food prices likely provided only modest upward contributions. Looking onto Wells Fargo, which is also one of the other big banks in the US, Wells Fargo is indicating that the March consumer price data demand increased the tension after consumer inflation surprised to the upside at the start of the year. Keep in mind that if you look at the CPI readings that we had for January and Feb, they showed signs of resurgence, but a lot of the trading community was surprised that when Powell came for the conference that he had in Feb, he said that even when he did not show us that resurgence is a problem, right? So which means even when we get high inflation today, it might not affect the risk on assets. So the indices and of course some of the other assets like the GBP USD, Euro USD might not sell as much, only if we get a really, really high number. But if the number is just sticky and it comes in line with expectations, then I think the DXY most probably will not be saved and it will continue selling. So Wells Fargo is also showing here that yes, there has been a bumpy and stubbornly slow retreat in inflation, but they're also expecting it to steadily rise on headline monthly by 0.4%, in line with the previous, which was also 0.4%. And they're also expecting that a year ago, the year-over-year annualized basis most likely is going to reduce to 3.5% from 3.7%. Yeah, so Societe General is also indicating that they are expecting core to also increase to 0.4%. Bank of America is also indicating that they are expecting it to cool to 0.2%. That is the core month-over-month basis. And again, we have a mixed result there. This is how the reaction was the last time we got the CPI numbers. So traders, what I can say is that CPI of late hasn't really been giving that much of a move. We might get a bit of a move maybe on the currency pairs like Euro USD, AUD USD, GBP USD. Most probably you're going to see a move of roughly anywhere between 20 to 100 pips. You will be lucky to get more than 100 pips. I think it's going to just be some kind of steady move there. So when we had the CPI not rising as much, the dollar index actually dropped the last CPI, and we also saw that the S&P 500 actually skyrocketed higher. We saw the US government bonds actually steadily declining. Yeah, so which means the CPI needs to really surprise to the upside for that dollar index to actually rally. We need to get a really nice higher CPI. However, if we don't get a very high reading for CPI, then I don't expect us to see a strong DXY today. So crossing over to the calendar, just to look at what the readings are. The general consensus for CPI for the monthly, that's on headline. The general consensus is that we get a slight decline to 0.3% in line with the forecast. And for core, we're expecting that we're going to get a slight slowdown to 3.7%. And for CPI headline, we're expecting it to slightly increase to 3.5%. So should we get an increase on headline from 3.2% to about 3.5%, 3.6%, should we also get that the headline month over month is going to increase to 0.4%, then we might see a bit of a surge on the DXY and a potential slight sell on gold and other assets like GBP USD and Euro USD. However, if we see on all the four components that the CPI has actually declined, then I don't think you'll expect to see any move there for these different assets, and it means that we shall then have to focus on tomorrow's GDP report, as well as also the ECB conference for any movements on Euro USD and GBP USD. Now, keeping CPI constant, I just want to mention for those of you that are trading gold before I cross over to the charts, keep in mind gold has a lot of catalysts. You're talking about earthquakes. There has been an earthquake in New Jersey in the US. There was an earthquake in Indonesia. There was an earthquake in Taiwan. In addition to that, you have really, really heightened tensions between the US and Iran. Iran has not shown signs of likelihood that it's going to respond to any ceasefire. Yes, there's currently hopes that a ceasefire somehow works out and Iran, comes out and says, okay, fine, we are likely to see how we can cut some kind of a deal. But looking at the recent news, and of course, 1 hour ago, we just got some news coming in that Iran's supreme leader says Israel must be punished, and it will be. So, comments like this really, of course, scare investors, and you're having a lot of people running to you have a lot of people running to safe haven like gold for safety, because the tensions are really high. Tensions are high. We're not so certain what Iran is going to do. If they do not come in to cut some kind of a deal through the ceasefire talks, then it means that gold will most likely not react to any news. I've been advising clients, of course, when you're approaching gold, focus and see what is really happening with the tensions. The tensions are really, really high at the moment, and that will really press gold and possibly maybe send gold higher and higher. Now, in addition to that, you also have central banks really buying up gold really much. I mean, we had Turkey increasing their gold purchases from about 390 tons to about 500 tons, and then you're also having China increasing or ramping up their gold purchases 18 months in a row, so that's really what's happening. So before we cross over to the MT5, I just want us to see what the DXY is doing. So the DXY has not been having that much of a move. Last week, despite us getting a relatively strong NFP reading, the DXY did not hold its move higher. We got that NFP reading around that was, I think, on the 5th. Was it the, yes, 5th of April. Okay, so 5th of April, we had a bit of a move higher, and of course, then that move was reversed. And DXY is trading in a kind of a choppy trend. If we see a very sharp resurgence in CPI and possibly also PPI that we're getting tomorrow, then DXY most likely is going to come back and revisit its 2nd April highs, somewhere around 105. Okay, so the movement for DXY is majorly going to depend on what happens with the CPI reading we get today. Okay, we need to get a really, really strong CPI reading for us to see a much higher DXY and, of course, a move higher. So let's cross over to the charts. Let's cross over to the charts and see what is happening over on the different assets. So now, guys, I'm going to focus on the things that Mickey Mouse, you're saying bullish day. That's a really interesting cartoon you have over there. That's awesome. Bullish day. Are you talking about gold in this case? I don't know. Yeah, that's an erupting volcano. Okay, awesome. So let's look at gold. Yeah, so gold, this is what gold is looking like. So last week on Friday, I drew for you guys this condensing, it's called a descending condensing wedge, this one right here. So gold broke above it. We had a very nice liquidity sweep. This was the NFP candle we got for gold. And of course, the NFP candle turned and broke above the top of that wedge that then resulted to a sharp move to the upside. So that move on gold also took out the double top we had around 2,300. And around this time, we also had the earthquake that happened in New York. So the earthquake, they released news for that earthquake around, I think it was around, was it 5:30? Okay. So that earthquake news intensified the move for gold, and we saw gold actually breaking above that 2,300 level. So gold has been in a steady uptrend, and at the moment, we are seeing some kind of an asymmetrical pattern that has formed on gold. So if we see very low numbers for CPI, then it's likely that gold is most likely going to break this level. And the market is right now on tensions. If Iran does anything this afternoon and possibly even into the week, gold is going to break past this top level and move higher. I don't expect us to see that much of a reaction on CPI from gold. The CPI needs to be really, really, it needs to be a really big CPI. We need to get a really big reading for us to see a move higher. If we don't get if we don't get a really nice big CPI reading for this afternoon for core and headline, then gold most likely is going to move higher and possibly break to this level of 2,370. If Iran decides to stop that ceasefire talks or does not make progress during the talks, then we're also going to see gold progressing higher. However, if we see some strong CPI for CPI today, and also if we see Iran at least making some progress, but by the look of things, I don't think we're going to see Iran. The last comments we got from Iran, they were saying that that they are going to make Israel pay for what they did in Damascus in Syria. So I think for me Gold still very bullish. Looks like it's still going to surprise us with breaking those record levels, and we have to wait for any surprises there. So crossing over to Euro USD. Euro USD right now at the moment on the H1 time frame has some form of an ascending triangle, and it looks like it's possibly going to move higher and possibly even break to higher levels on week CPI today. If, however, we get a strong CPI reading for the US, then we are going to see Euro USD possibly selling and then coming back to this zone around here. Now, finally, GBP/USD is currently in some kind of a rising wedge, and we expect to see. We have to wait and see what happens with that rising wedge. If we manage to break above the rising wedge, we are going to test that level of the fib, which is somewhere around 1.27060. If we fail to break that fib level, then it means that GBP/USD is going to retrace lower and possibly trade to this level here of the fib level around this is around 1.26220. Okay, yeah, so that is really what I have for you guys on our charts today. We still have GDP for the UK tomorrow, which is also a very strong catalyst for movements, and we also have the ECB conference. So it's question time, guys. If you have any questions, now may be the time. uh, Now may be the time for you guys to pop your questions. Okay, so if you have any questions for me, please send your questions through so that I can handle them. The only charts we have for potential moves today is Euro USD, GBP USD, and gold. I do not have any setups for you on Nasdaq and the Dow, because they are still very choppy and they are not really presenting to us any moves there. So we just have to wait for how the CPI affects those different assets. Okay, so awesome. So I think for me, that's what I have. Maybe we can just briefly go back to Chrome so that I can show you guys what. Okay, Mickey Mouse. Man, I really enjoy your energy today morning. Thank you so much for joining us today. Mickey Mouse, you're saying, do you think a trader should be more capable on the technical than fundamental side? Definitely, without a doubt. I think as a trader, you need to be really strong on a technical, simply because a lot of the movements we see on the charts are purely based on technicals. Fundamentals really just intensify or get things moving, but we don't really see that much of a move. If, of course, it's good to have some technicals, to know some technicals, but rather it's good to know some fundamentals. But without a doubt, I think technicals are what determine where the market goes. USDJPY setups, guys, for USDJPY. It's been very range bound, so I don't want to show you guys setups that are really not there. Okay, I think as you have been seeing it, it's really range bound. I think there are really a lot of choppy movements on USDJPY, but it's also sticky to the upside. Okay, it's been in this box, this Davos box, since 20th March. We are now on 9th April. Okay, so the movements on USDJPY are still very choppy. Mercy, yeah. So for USDJPY, that's really it. Very choppy, not that much of a move. If we get weak CPI today, then again, it's going to stay really range bound. Yeah, but very range bound. I don't really see how you can trade this one today. So maybe you can take it as it comes and goes. That's really up to you. Awesome. Any other question? US 30 roll, no setup on US 30 roll. There seems to be some kind of an asymmetrical triangle on it, forming in this shape and form, something like this. But still, again, it's still also stuck in a range. We are not yet so certain how it's going to react. to the CPI. Either we are going to see a move higher or we are going to see a move lower. It's going to really depend on what the CPI does. So we need a break, either a nice break above this channel here, or we need to get a nice break below this channel here. So one of the two. Yeah. So that's really what I have for US 30. Awesome. Okay, so let's just look at something briefly here. There are three CPI datas. Which one should we look at? Is it the core month over month or yearly? Since they have three different amounts of people interested in reading the news. Now, guys, that's why it's important that you focus on the charts, okay? Because you see, the thing is, yes, you will interpret the data sets, the core or the headline. Okay, just to answer your question, first, what matters is the headline. Headline is what matters the most, okay? But more importantly than knowing which CPI is which, okay, is that as a trader, you need to focus on what the chart is doing. Okay, you might get you might get mixed readings where you have the core declining on a monthly basis, on a yearly basis it's increasing, then you go to the headline is declining, monthly basis it's increasing. You have mixed data in that case. Okay, you have mixed data in that case. So I think now what you need to do in this case is you now just focus on the chart. What is the chart doing? Are you seeing a build up of price action to the upside? Are you seeing a build up of price action to the downside, right? The technicals in this case now will be the determining factors for what you do and how you go about your trades. Okay, so for me, that's what I can advise if you're looking at it in that way. Uh, uh, um, uh, Apple, you're the one who asked about that. Yeah. So as we wind up, guys, I want you guys to just check through Spectator Index because it will give you some updates on what is really happening, uh, really on the news. There are right now at the moment there are really a lot of heightened tensions. I saw some news the other day that Germany has spent as much as $7 billion in buying warplanes and military machinery. Okay, I do not know what it is planning for, but gold is definitely telling us something. The tensions are currently quite high, and you can definitely check them out from here for you to find out what's really happening. You can check Spectator Index. You might also want to check Financial Juice to tell you what's happening. So if you look at the Asia market wrap here, it's saying Asian markets edge slightly higher in a range bound trading. Of course, a lot of things right now are currently range bound at the moment ahead of this afternoon CPI reading. Stocks are also still quite choppy, not showing us really much of a direction. And of course, I think the main thing that traders are waiting for is what happens with that inflation data. Yeah, so that's really it from me, guys. Unless you have any questions for me, I think I wish you all a happy Eid Mubarak holiday. And of course, I wish you also happy trading today. All right. Cheers, guys, and happy trading, guys.